Welcome to Taking Stock. I'm Amanda Lang. Coming up on this show, more businesses find themselves on the brink. Will the worst be over soon? And the cost of buying a home isn't just about the price itself. Plus, carbon capture and storage may be turning out to be a lot of hot air. That's all ahead. First, for the week that was in business, it's time for the briefs. The jobs market was strong in April with a gain of more than 90,000 jobs. More than half of them were in the private sector. The unemployment rate remained unchanged at 6.1%. And while jobs didn't keep up with population growth, it may take a June interest rate cut off the table. Hundreds of Nestle workers in Ontario were on strike this week after rejecting a new agreement. The plant produces chocolate bars including Kit Kat, Aero, and Coffee Crisp. Workers objected to a 2-year freeze on cost of living adjustments and wanted changes to the pension plan. TD Bank could face a massive bill related to money laundering allegations. One analyst this week said penalties paid by the bank could climb as high as $2 billion. TD is not alone. CIBC and RBC both also faced fines from Canada's financial crime regulator for failing to live up to anti-money laundering practices. The issue came to light last year when U.S. regulators blocked TD's purchase of U.S. bank First Horizon over concerns around suspicious activity. Canada's Competition Bureau has opened an inquiry into whether Lululemon misled customers with its claims of its business being sustainable. It comes after a complaint from an environmental group which said Lululemon's Be Planet slogan was used over a period of time when its greenhouse gas emissions were actually rising. The Bureau is reviewing whether it amounts to deceptive marketing. And those are your business briefs. A rising number of businesses are calling it quits, and an increasing number of consumers are also opting to file for insolvency. It's the latest sign of weakness in the economy, but will it last? Royce Mendes is head of macro strategy at Desjardins. Thanks for being with us.
My pleasure.
So these rising numbers, obviously not good news. I guess the question is, are we seeing a kind of a peak that may well improve? Is there any way to know if this is the beginning of even worse?
Well, what we saw in March was that the numbers of businesses filing insolvencies actually came down. But that's where sort of the good news, I guess, ended, because it's still at very elevated levels from a historical point of view. So the question is whether this is just a blip and it was tied to the CEBA loan repayment deadline. Those were the government loans that were handed out during the pandemic. There was a deadline to repay them in mid-January, and it seems like it coincided with a really large spike in businesses filing for insolvency. If that's the case, and it's just tied to that one-time repayment deadline, then hopefully we'll see these numbers come back down in the months to come. But, as you know, the Canadian economy is not exactly faring very well. So it wouldn't be surprising to me if these business insolvency numbers remained elevated for some time. I guess time will only tell. So let's drill into kind of the state of the economy. I think a lot of people maybe a year ago might have been quite worried about whether a recession was coming. We seem to have taken that off the table. So should we be feeling at least optimistic on that front? Yeah, I think we should be feeling more optimistic than we were just over a year ago when most economists were calling for a recession or something that felt like a recession. What took that off the table was the explosive growth in the size of the population. It wasn't that something magically happened and changed the overall productivity of the Canadian economy. We know how bad productivity has been in this country. What changed is population growth, so we grew the size of the pie. Really, what happened is that businesses saw a lot more sales because we kept adding new people. The per capita sales don't look great. And if we're looking 6 months or a year into the future and the federal government implements its plans to curtail immigration, while that may do some good on the affordability front in this Canada, that's going to hurt on the economic front, and I worry that that's going to coincide right with the time that the big wall of mortgage renewals is happening in 2025.
So there could be, that's still out there, of course, that whole renewal pain for many. We do have some improvement in wages over the past year or so. Wage growth still remains pretty elevated compared to recent history. Will that offset, do you think, some of the pain headed towards households?
It'll offset a little bit of it, but I think the real silver bullet, if there is one at all, is the Bank of Canada's policy rate. We've done simulations of what this looks like a year from now if the Bank of Canada were to leave the policy rate at 5%, which we don't expect, or begin cutting and doing so pretty consistently, or somewhere in the middle, which is what the market has priced in. If you do anything other than the Bank of Canada cutting pretty consistently, you're left with mortgage payment shocks for some variable rate homeowners, variable rate mortgage holders, of like 50, 60, 70% in terms of the upward payment shock that they're going to see on a monthly basis. That's tough to swallow, and that's why we really think everything depends on the trajectory for the Bank of Canada's policy rate. The really good news here is that it does look like inflation has come under control, enough at least to begin a rate cutting cycle in the next few months.
And in fact, Royce, could we say that that rate cutting cycle could begin as soon as next month? There seems to be growing optimism that the start of that will be June.
I would tend to agree with that. We cut and slice the inflation data in every which way. And just about all of the indicators that we're looking at are pointing in the direction of inflation normalizing back to that Bank of Canada 2% target. In fact, if you strip out things like energy, food, and shelter, maybe not a great gauge of the cost of living in Canada, but a good gauge of what the Bank of Canada can control, inflation is actually below that 2% target. So from the Bank of Canada's perspective, I think right now they have a lot of reasons to believe that they can begin a rate cutting cycle next month. We do have one more inflation print before then. That'll probably determine whether it's June or July, but I think it still makes sense that the rate cutting cycle starts around the middle of this year.
So good to have you, Royce. Appreciate your time.
Thanks for having me, Amanda.
Royce Mendes, head of macro strategy at Desjardins. Coming up, some of the costs of buying a home have nothing to do with the roof over your head. Stay with us.